Hi guys, Michael back with Horizon Trading. Today we're going to be talking about price action secrets. So, how it all works, what it is, stuff that people tend to miss about it, and how it ties into our strategy and kind of how to trade with it in general. Okay, so let's start off with what most people tend to get wrong. I think modern trading, like a lot of people nowadays, seem to think that you need a lot of indicators to be able to read the market. This simply isn't the case. If you want to go with price action, it's a very simple, non-crowded kind of graph you're gonna have, because a lot of people, they have a terminal that looks like this, which I think is absurd. You don't need this much stuff on your screen in order to be able to read the market. It's a lot simpler than that, honestly, and price action helps you do that. So, this, if your graph looks anything like this, if it's all crowded, if there's lots of stuff going on, there's a lot, easier ways to kind of do this, to be able to trade, to be able to read the market. So, let's get into that. Right, so price action is a very simple concept. Essentially, you have four main, stages of the market. You have a, declining stage. You have an advancement stage, advancing, I guess. You have a distribution, which is a range in an upward trend, and you have a consolidation, which is a range in a downward trend. Okay, it's as easy as that. So this is euro dollar. Okay. And I think a few things become very visible. So price action really is just support and resistance mostly, like if we're being completely honest. So, for example, let's say clearly we have a range here. So what is this range? Well, I can tell you that this range is a distribution because it goes after an upward trend. So this clearly was a bit of an upward trend, or even the whole thing is an upward trend, I'd say. And after that, it goes down. The price starts going down, and it goes down for a while, realistically, right? As you can see, the market is nothing but, a series of ranges and trends. If you look at the market as just a series of ranges and trends, a lot of things start becoming a lot easier because a lot of people tend to overcomplicate trading in general. Again, with the indicators and everything, it doesn't have to be that difficult because you can see trend, consolidation, trend. Again, trend, consolidation, trend. Trend, consolidation, trend. Like, I'm pretty sure this speaks for itself, really. Like, and the thing is, it works on pretty much any time frame. So, again, even on smaller ones. So, if we were to go down, I won't even go down, but say like this is probably on M15 again. Trend, range, trend, range, trend, range. Right? It's as easy as that. It's just a big collection of trends and ranges, and when you look at the market that way, it becomes a lot easier to read. It becomes a lot easier to essentially predict what's going to happen. I mean, people keep talking about a holy grail. If there is one, it's price action. It's very simple to understand what's going on. It's very simple to actually be able to react to situations in terms of price action, because again, if the market is a series of ranges and trends, the only thing you need to actually be able to trade on that successfully is to know when a range is going to end and turn into a trend. You can catch a trend, sometimes a very, 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 very big trend, as we can see right here, and use that. And it's very easy to do. So all you have to do, go to a smaller time frame. Let's find our little range we had right there. Right, so this is the same place where, this is that range we had on, D1. So we can see both patterns here, both patterns unique. Essentially, when, you've learned to find ranges, which again is just when the price isn't going up or down, when it's going like this, when it's in a balance. I don't think that's a difficult thing to find. You have these little ranges, right? Which, generally I'd say we put like that, maybe. Yes. So your task would be to see when there's a breakout, either way, to see whether the price is going to keep going, that way, or if it's going to come back. It's basically if it's a breakout or a false breakout, right? Now this is very easy to do because there are two patterns which both work rather perfectly, and they're as easy as what you've already seen on Horizon. So this is a false breakout. How do we know? Because it broke out, came back, and then it had a bit of a pullback, right? it retests the level from the other side. What could have happened is this, and then it would have, you know, probably tested it from this side and then kept going up, kind of a two-pronged, you know, breakout. But no, what happened was it came back, which is normal. This could still be a breakout. Don't think that just because it broke out and then came back in that it's going to be a false breakout. It can still, you know, return and go and screw you essentially. So you know, when it tests the level from the other side, so this would be a resistance level. When it tests it, and here you can see, excuse me, here you can see that these three candles are almost the same length. What that is on a small time frame, that would be a fractal. So people keep asking me what a fractal is. Essentially, this is a fractal. So on a smaller time frame, this would have been also a fractal like that. And then it goes down, right? How do we know this is a false breakout? So the price, you know, it broke out, then it retested like this, and it went down. It's that easy. Really, it's that easy. Here again, you know, it went down, then it impulsed, which also really can count as a false breakout. If it impulses right deep into a range, I think it's still very much, you know, kind of, it's still very much a false breakout. And then we have an actual breakout over here. So very simple concept once again. It goes, you know, it tried to break out, then it actually impulsed out, so it has to be an impulse like this, right? Then the price retested the level on the other side, and then it went down and had a happy little massive downward trend after that. So that would look like this, and then like this. So again, a fractal, and then the price goes on its merry way. That's it. That's price action. That's how you trade successfully with price action. That's all it is, really. So again, we had this little, you know, distribution kind of stage here. Then it went into a declining stage, which it was in for a very long time. So essentially, like the way you find whether, like, I mean, honestly, I say, you know, declining and advancing. Really, what it is it's a downtrend or it's an uptrend. That's all it is. So you can see that the lows kept getting, you know, refreshed. That's kind of how you see that a trend is a trend. What you do after that is you wait for the price to, well, you know, depending on your preferred time frame. So this was a bit wild, right? But honestly, I would say that this is actually as easy as, you know, a consolidation. Because I mean, this is obviously fundamental stuff, and I mean, this was within the daily time frame. So this is kind of hard to gauge. But you know, even if that isn't a you know, part of the consolidation, this certainly is. Because there's a lot of movement, then there was a bit of a consolidation. It's very, you know, flighty one. It's very wide, but it's still a consolidation. And then the same concept happened as always. Boom, retest, and then it went up. And in fact, to tell you more, this is also looking very much like a consolidation. So rather, this would be that's the consolidation. This is a distribution stage. And what's going to happen? I'll tell you as a secret. It's either going to go up or it's going to go down, which I think sums up Forex very well in general, but you know, it's either going to do something like that or it's going to do something like that. I promise you, that's what's going to happen. You know, like my, you know, my trading idea for this time is that the price is going to either go up or either going to go down. But again, if you look at it here, this is, you know, down 2 time frames. So there's a consolidation here. Once again, there was a, rather a distribution. So there was a, you know, advancing stage, distribution. Classic kind of retest, declining, consolidation, distribution rather. Right here, again on a small time frame, it'd be a lot clearer. You know, again, it goes down. So again, it's a series of ranges and trends. That's all it is. Like the price is either going up, you know, it's either going up, it's going down, or it's not going anywhere. You know, flats are not bad. Right, kind of static market isn't bad because it means that the market's getting ready for something. Because the buyers and the sellers are, you know, in balance, and what that means is that, you know, one of them is going to win, and when they do, they're going to have a lot of liquidity because you know, they consolidated essentially their position. There's a lot of liquidity behind both of them, and whenever one of them wins, it's like the floodgates are open and the price is going to just shoot up. That's why impulses happen, as we know. You know, if someone just enters with a very big volume, what happens is that it causes a disbalance because they have a lot of liquidity, and the same thing happens with ranges and you know, trends, right? Starting a trend is very nice, but catching a trend is the best thing I think you could hope for as a trader. So if you look here for this time frame, so H1, this would have looked a lot like the whole thing actually would have been very kind of consolidating moment, and then here we have a nice trend. Here it redistributes again, and then it goes down for a bit. Then it consolidates, goes up, and so on and so forth. Like I said, I can show you, like I have examples for days, and this is just euro dollar. I could show this on anything. I could show it a million times on any single instrument. But the point is, I don't have to, because I think you get the point. I think you get the point that this is incredibly easy to find, incredibly easy to use, and incredibly easy to see. Okay, let's just recap. Let's recap on a new something new, right? So let's take pound dollar. Okay, let's just change it a little bit. So let's recap. Let's say H4, right? So first thing you do, you find a point of balance. So where the price is kind of just staying in the same place, right? So this, for example, would be a consolidation, right? Or even the current price. So what's happening to the price right now? So it looks like, it looks a lot like the price was in a consolidation right here, right? And there was a bit of a distribution stage, and then it broke out like in a very classic fashion. So boom, impulse, kind of a bit of a pullback, and then it went in for a bit of a distribution again. Then again, a very classic breakout, and it's probably going to keep going for a while. But yeah, like if the price is going to go down, at some point it's going to reach a place where the price is neither here nor there, right? It doesn't go much. It stopped kind of going down, but it hasn't started going up, right? So either the sellers are going to kind of still win, and eventually the price will break out and go, keep going down, and the trend will continue, or something like this will happen, and the price will actually start going up, and then eventually, when the buyers running out of steam, when the bulls run out of steam, they're going to start, kind of slowing down a bit. The price is again going to reach kind of a point of equilibrium, and then again it's going to break out with a very classic pattern. So either just a very big impulse with a bit of a pullback, and then it's going to go, or it's going to be something more like more classical. So you've got the thing, right? Then it does this, and then it goes down. Like a big impulse generally tends to be sometimes it doesn't look like it pulls back at all, and that's normal, really. Yeah, honestly, that's all I have to say. Price action is very simple, and I don't think that there's much more to say in general, right? So I hope I've made it clear. You don't need indicators to be able to trade. This is a very powerful technique, very powerful way of analyzing the market. You can legitimately trade with great success just by looking at it like that. Find a range, when the price, for example, the current price, when it starts doing not this or this, when it starts doing this. Okay, you're in a range, great. Now wait for the price to either do this or do this, and enter, and that's it. That's literally it. Grab yourself some money management, and you're making money. That's all it is. Really, it's that simple. And the best thing about it is that our strategy is entirely built on it. It adds a few things, but if you seem interested, if you want to learn even more about this, even though price action itself, again, very simple concept, but if you want to learn how to improve your analysis of these things and stuff like that, make sure to go down the link below and sign up for our free course on this. So Horizon for beginners, not just for beginners, but it does suit beginners very well as well. And learn more about price action, learn more about money management, how to trade on these things, and I hope you've enjoyed, and I hope you have a good day. Thank you, and bye bye.